Welcome to the Debt Doctor podcast, where we deliver the definitive prescription for navigating distressed real estate debt. I'm your host and America's most qualified debt doctor, Bill Bymel. I've spent my career investing in, diagnosing, and reviving thousands of distressed real estate situations. The Debt Doctor prescribes proprietary remedies to help you identify, acquire, and monetize undervalued real estate assets. Each episode gives you insider access to the strategies top cohorts use to transform market volatility into double-digit returns. If you enjoy what you hear today, hit the follow button, subscribe so you don't miss an episode, and please share your support with a quick review. You can find me on the web at billbymel.com. Thanks for joining this episode of The Debt Doctor. Oh my gosh, I'm so lucky to have my friend Salvatore Buscemi with me. Man, we don't really catch up often enough. It's only in settings like this that it seems like we actually get a chance to sit down, and because I think, our time is valuable, and, when we do get together, all we want to do is catch up on what's going on in the industry from your perspective and from my perspective. And Sal, welcome to the Debt Doctor.
Well, it's a pleasure and a privilege to be here. Thank you for having me. I really do appreciate this.
You have a wonderfully prolific industry in history in private equity, starting way back at the Goldman Sachs days in the late 90s. Give a little history so people know.
I wrote a book on this called Investing Legacy, and any of your listeners want it, all they have to do is email me, and I'll give them the email at the end of the show.
Perfect.
To get a free copy of it. It talks about how I was supposed to go to medical school and I didn't because I passed out holding a cadaver. And if it wasn't for the doctor that literally I was holding a fibula in the Insel Scott Kelly Institute, which is no longer there. It's long turned into condos. And it has turned into be, it's just a remarkable situation. But over there is where, in New York, there was Gloria Vanderbilt, and I looked up to this doctor I was doing a lot of work with. And I really gave him my all, like to the point where I was riding my mountain bike 12 miles to get at the time, I'm dating myself, but we didn't have you weren't emailing files, so microfiche and everything, right. So I had to go pick them up at the library, make copies, and then deliver them for the meeting, down at the hospital the next day. And when I called him, I was actually avoiding going, to talk to him because I championed him, but I felt like I was quitting and all this. And he said, "Don't worry about it. My brother just made partner at Goldman Sachs. He wants to talk to you." And then the rest is history. And I did a lot of the, in the investment banking division, there was a lot of the stress at that point coming off of that. And then fast forward at the age of 29, I decided to go out on my own and I raised $30 million from a Park Avenue investment manager to basically buy all the stuff from Bear Stearns. And I think that's where you and I met in the business, during that time. And afterwards, we did another fund where we raised more money, but we were buying fractionalized first trust deeds using a Dutch auction technique. We could talk about that in another podcast, how we did that.
Wow.
But we've been very interested. And then I got outbid on stuff by a lot of doctors and dentists, Bill. Can you believe that? And I was like, I had to hand back a lot.
Money, you mean?
I had to. I was like, I don't know where this money was coming from, but it was, it was definitely new immigrant money, but it was definitely professional money, right? So, people who know the least about math are investing in these deals. So I'm like, all right. And I had to make a decision. I handed back probably about $20 million to a bunch of families. This is before Brahmin, what it is today. And what I did was I had to actually go back and I talked to each one of the families, and they're like, well, what are you looking for? And a lot of the New York families that I've known, some of them were in life sciences. They're like, Sal, why don't you point your guns at us? This is great. It could be, really useful that way. And I built a reputation for getting people to invest into things they never wanted to invest into, but they got a lot of exits out of it. And that was technology and life sciences. Because what I figured out is that a lot of the real estate families I knew all had a gateway to life sciences through philanthropy, which has very high material expense ratios, but it's emotional and it tugs on the heart. But in the families, they don't like it because they don't know where the last dollar's going or how much of it, they see Susan Komen there. But when I show them
Right.
that, near close to 100 cents on the dollar is going to the intended recipient that you want this to be. And by the way, you can touch the cloth of these CEOs. It works out. But we have two rules for that. And then I'll get into what we're doing today. But No first time operators or founders. We're not Shark Tank. We're not tuition. One of our founders has had 17 exits. Thrive Bioscience will be his eighth unicorn. Same with SpaceX and Stripe that we got invited into as well. And also, I want them led by an in-kind family. You don't want a real estate family leading a life science family, a life science deal, right? Because they don't know
Right.
anything. It's not really, it's not really in kind, what I call it. I want a family office leading the investment. Because we've been good Boy Scouts and everything, we've expanded. We have 13 families right now, all over 100 million that my partner Albert and I have known since he left Rockefeller, where he managed 6 billion for the Rockefeller family in life sciences and technology, which is how we see this stuff. And also, he's one of the reasons why we get involved in a lot of these deals. But now we're going back into real estate because we can get into that maybe a little later, but all the foolishness is out of the way now. A lot of the, a lot of the kids who look like they couldn't pass math in high school were buying, multifamily, and, they're outbidding each other. And, that's the lowest barrier to entry sub asset class, right? So, but we don't play in those circles. Our families are already
Right.
rich. They're not looking to get rich, right? So it's not a wealth creation device. People, when they invest in real estate, they don't know what their intent is. And if you're doing value added class C to B real estate, you're in wealth creation mode. Really, that's what it is. Some of the wealthiest families will buy core and stabilize like we do because they don't want to deal with it.
Right, right, right. So you said so much, and I want to take it back a little bit. You spoke about your families. There's 14 families in
13,
Brahmin Part
13, Brahmin
13
Partners. Yep.
Brahmin Partners, a multifamily office.
Hmm.
And this is a new venture, life sciences, et cetera, et cetera. What take me back to the period of time when the dumb money first came into the market, and you started to pull back and really started to think about giving money back to the families.
I'll tell you what it was.
What year was that?
This was
Yeah,
2013, 14, 2014.
that early. Wow, wow.
Yeah, so this is like, I don't know, this is pre that, but now, I mean, this is back then. So, back then, dumb money's dumb money. It doesn't matter. But, then the story was that things were coming back. There were green shoots, and, opportunity, things were just increasing in value because the interest rates were driving all of that. Contrary to what
Right,
most mortgage brokers and realtors tell you, it's dependent entirely upon the Fed. There's no real free market enterprise in real estate, but nobody likes to talk about that. Again, that could be another podcast, Bill, right? And I'd be more than happy to do that, but
absolutely.
I don't.
We are
We can
definitely going to come
yeah.
back and talk about the feds. That is, we could do a whole thing about that
Oh
on
my
real estate for
gosh,
sure. Yeah,
Netflix should pay us for that. Anyway, but I think
they
it'd
may
be like
someday.
it'd be like TEDx, but with charisma. It
That's
would be
right.
great. So I think when I got an email from the broker saying after that I had folded because they literally had money and they were able to proof up and do this and close it. These were assets we were buying for cash that are called necessity retail or grocery anchored, retail centers. And going back to Moses, these things have been trading at a 10 cap, and these guys offered an 8.25. And then afterwards, I told the broker, she's like, "What are you going to do?" I'm like, "I got to blink." And I said that. She's like, "Okay." And I said, and then she sent me an email forward 2 days later after the closing saying, "Yeah, we outbid an ex Goldman Sachs banker." I'm like, "All right, that never really works well for anyone." And I don't know what happened to that trade. I don't know what happened to that trade, and I'm like,
Oh, that's
but it
great.
but it actually made me be and this is capital raising. I'm just really now like a glorified game show host who can do math in his head, right? And it made me discover more of the intimacy with the families where they wanted to help, right? They're like, well, if you're not going into real estate, then why should I go into real estate? I'm like, well, well, what are you doing? All right, well, so some of those families are very smart because they don't come from a core real estate family. Everybody thinks if somebody's a millionaire, they automatically understand bond math, and they don't. And that's always been the case with real estate. But when I started seeing those things where these guys were going all in and they had conviction and they were going to, and they were, trying to catch, of course, the seller's trying to catch the highest bid. They
Right.
took it. And so I just went back. But that, over the course of like
So
2 weeks, just wiring money back, you learn to talk to the families. So like, why are you giving me money back? And it's like a mature thing to do.
it is amazing. I think it probably bought you a huge amount of wealth and loyalty, and and respect on the part of these families. And I admire that, especially because as someone who myself has dabbled in, making a living as a money manager, as an asset manager, fund manager, I know it's not easy to not put money to want to put money to work when that's your own bottom line. And I've done that over and over again myself in real
Hmm.
estate deals. And I, like you, I think what you were saying is then you really didn't do a real estate deal since before COVID, or the right before, if I could.
99. Yeah, 99. It was a Class A
19,
industrial.
19,
Yeah. 2019. Yes,
right.
2019. We like Class A industrial flex. We love it. You have a higher caliber tenant there. They are now seen as a new core. We're actually having a presentation next week. We're working with one of the storied families leading this deal, and it's perfect for families because they're not getting outbid on things behemoths like what Nuveen would be in, or Blackstone, where it's like 1 billion square feet. This is like between 150 and 300,000 square feet. Perfect for families, full GP control and everything, which is great for us because it gives us that intimacy and control that we want. But also, it's throwing off incredible returns as well. And, people think just because, you can raise money for something doesn't necessarily mean you should invest in it, because it takes the biggest balls to choose what to invest into. You screw up one real estate deal, and there's a tail on that bill. I don't know if you know that, but your listeners don't. Like defeasance on CMBS, or, anything goes wrong. I mean, the moment you take a bank loan out, you are in default somehow technically. They just haven't found it yet. It's sort of like buying an apartment. It's like buying an apartment on the Upper East Side. You know that there's a cockroach there. You just don't know where, right?
You just haven't seen it come out yet.
Yeah, you haven't seen it come out yet, right? So, but then
That's
it's
a
like,
very good point. The
yeah,
minute you sign a loan document, you are already in default. They just haven't figured out where.
yeah, yeah, yeah.
These most of these loan documents, facilities, mortgages, leverage lines, they are so intricate, and there's so many ways for you to be in default technically, that you're absolutely right. The minute you
Mhm.
sign the document, you haven't even done
Yeah.
anything wrong,
Hmm.
and you're probably
No,
already
that
in
is true.
default.
That is so true. I think we still here.
So
Can you see me?
then this
Bill,
is it.
you
Your
there?
first
Hold on.
foray back into
Uh,
real estate in 5 years.
Perfect. Sorry about that. Yeah, I think, anything when you look at I mean, people go into this and like, yeah, I got a great loan. I got this, I got that. It's amazing. Let's see what happens when it goes wrong, right? And at that point, there's a lot of people out there who are popular for being like default debt fixers, but I mean, it's a long, arduous process. And I saw like last time, this happened, and we haven't really seen too much of a default yet with banks or anything, like not anywhere near 2008 style. And actually, I put together something on my LinkedIn today that talks about sort of like the state of the union. But one of the things is back then, GPs were pledging, I mean, they were using general partnerships as this legal structure, and every limited partner was a general partner liable for the entire debt in whole, not in part, right? So and I met a lot of dentists who invested in these things. They're like, I don't know what to do with this. This guy, I don't want the bank coming after me for this. I thought this was just a passive investment. And then you find out who you've been dealing with, right? And usually a lot of the troubles that come from these deals are from new, inexperienced operators who are trying to save money, and they just pay someone to put together, a Reg DC, 506C, just something off the shelf. It doesn't help them at all. It gives them some sort of legal comfort, but at the end of the day, they're not really looking out for the protections of the investors or anything. And that takes a lot of the heavy lifting to do that. And maybe AI will replace that, but for the most part, I've seen doc sets that are like, this is just ridiculous. Like, I don't know what to do with it. I really
I
don't.
hear that. I do hear
Uh-huh.
that. And I have a lot of, so speaking of commercial deals, whether it's multifamily, I mean, I guess you really, um, you've seen it all. You have investors, partners, I'm sure families inside the multifamily office you manage that have situations that, they've, whether it's COVID affected real estate or whatnot. I'm hearing stuff like LPs who being wiped out of equity on multifamily deals.
Anyone in multifamily has been wiped out. That equity is gone. Family is still, the banks are extending and pretending, but they're also taking back too, right? And, the one thing that's interesting is that, again, there's so much private credit out there as far as the dry powder is concerned that these buildings are still getting like 20 to 30 bids, right? I mean, I wrote about this, but there's still activity in the market. And when you have that much capital and that many bids coming in, at the point is like, all right, what's the quality? But I mean, are you really going to get any higher of a cash on cash return or an IRR if the spreads are so tight, right? I mean, between the
Right.
bid and the ask, and they're getting closer to the ask, right? So it's like, hey, it's just new equity. You just foreclose, wipe out everything. The soul is cleaned, the asset, the soul is cleansed, and now you can, put more leverage on it or, restructure it. But I think you're seeing that today where a lot of these guys have gotten wiped out. They did some stupid shit that they should not have done, pardon my French, and they're getting into trouble because they tried to do it the easy way.
Right.
First time guys always try to do things the easy way. We put our documents together. It cost us about $250,000 to be able to do what we wanted to do. And that's fine because that benefits the families, but it also benefits us, right? And, people read the documents. A lot of unsophisticated investors don't. They think they do, but they're really fooling themselves because a dentist, does not know how to read a legal document, really. I mean, he'll go through it. He'll probably put it through ChatGPT, but he has no idea really what's going on.
Right, right. And the reason that most of these multifamily deals are failing in the last 4 or 5 years is people invested based upon what I knew to be ridiculous cap rates to begin with. You're buying into a deal that models in the 4 or 5 cap for a low rise in the Midwest, and with some projection of rent growth that will never happen, or it's just they never really made sense to begin with. And then when interest rates went up, those construction loans or whatever leverage these developers were using just killed whatever potential profit was in the deal. And now in many cases they're upside down.
I mean,
Um,
it is. I mean, I had a rule, and nobody could hit this rule. It's not just because it's not because the market wouldn't do it, and they had to make a living buying something. And I always say, like, the delta on a cap rate exit between what you're buying and what you're selling at should be at least 200 basis points. And these guys are threading the needle they're 36 basis points. All
oh
you need
my
is someone
God.
to sneeze, and that, you're done,
Yeah.
right? You're done. But they're capturing their upfront management fees, which I understand. But once that's gone or whatever, they just rinse, wash, repeat. But they had a lot of inexperienced sponsors who never thought or saw this before. Same thing
Right.
happened with Trammell Crow. Same thing happened to Trump. You get these young guys. They have no. I mean, if you read the history on these guys, Sam Zell at one
So
point.
right.
Everything. When rates go up, you're screwed. And when it's easy, is when you should not be going into the market.
Exactly. Exactly.
America's a
Exactly.
great country, but it comes with consequences, right? I mean, it's a great country
Well,
for entrepreneurship.
and if you think about it, I say this over and over again. If you're a 35-year-old banker or private equity guy, sitting on a desk at Goldman, you've never experienced prior to even a few years ago what money costs.
No.
As a banker, up until even a year or two ago, you never had to deal with the cost of capital. And then on private equity side, almost that as well. Or you're so used to high leverage in the world of leverage. At some point, do you think the whole thing comes crashing down, or is it going to be a soft landing, as they say?
I that's a very good question. I don't, are we talking about the stock market or are we talking about what?
I think we should broaden beyond real estate, because I think real estate has the potential to land because it's a hard asset. I would think there's so many other asset classes. What I think I'd worry I certainly believe the stock market is overvalued, but I'm also worried about derivatives and
I mean, we can go down that rabbit hole. So here's what I think. The consumer isn't the problem anymore. They're flush. All right. Gas prices are down. 401ks are up. Consumer leverage is down. I think the Fed might cut in July. If that's the case, it's not going to help everybody, but it's going to be great for equities, maybe in July or September. And I think that, what I don't think it's going to really move the needle so much on mortgages. I think the biggest issue today facing America, if you want to go down this rabbit hole, is what happens in this. If you because I do stay up late at night reading this, and I know many people, and this is what we talk about, is I think we're going into America's next great golden era. And there's going to be some bumps and bruises going into that. Nothing's going to be perfect. Remember, governments are not supposed to tell us the truth. It's not in the Constitution. It's nowhere. And I think after we clear out a few things as it relates to the tariff bills and everything that's happening overseas, then you're going to start to see some stabilization as it relates to oil prices. Oils will stay right now where the Saudis want it, between 60, 65 a barrel. If Iran were to close the Strait of Hormuz, then that would trigger weapons of mass destruction, as Warren Buffett called it, where you're talking about like 2 quadrillion worth of derivatives, which is like 20 times the global GDP, that need to be unwound if oil prices start to go to like $300 a barrel, right? And that is the biggest issue right now facing America, besides our own things. And I think Trump's trying to get ahead of it, and he's doing a great job with it, is that he's going to usher in a great golden century. I think he really is. And, I'm biased on this too as well. I think that you're going to see towards the tail end of his second administration an IPO market you will have never seen before in your life, right? And I think he's going to, you're going to start to see companies like Stripe go public, SpaceX go public. We do have holdings in that. Other companies selling off too as well, because at this point it would be, you have the enthusiasm back in the market, because the market is all
Right.
about emotional, right? I mean,
Right.
algorithms today take care of the technical, but people are mostly emotional. If you look at how Tesla trades, I mean, people should be backing up the truck on that stock, but they're not, because they're emotional, right? I mean, it's just, they're emotional. They're not professional. They don't see it. They see, the showmanship with two of the greatest showmen in the world fighting with each
Right.
other like parents.
Right.
And they think
Right.
the
Right.
world's going to come to an end. Meanwhile, if you look at the other end, SpaceX is doing really well. Neuralink is doing really well. And other companies in his, in his portfolio. So I think, I'm very bullish on America in the future going forward. I don't know if we're
And do
going
you
to see a
think
lot of,
those
yeah.
it's a lot of AI driven future that bringing back some of the manufacturing here, but then having us is AI going to play a role, or do you think that's overhyped, underhyped? What do you think?
I mean, as far as jobs are concerned, I mean, we're in an
Yeah.
AI world now that has not seen a change since the dot com. And I didn't work in this department, but during the go-go late 90s at Goldman, they used to call it the trading desk Cape Canaveral, because whatever went off that day just shot off into the stratosphere, right? As far as an IPO.
Right.
I think that enthusiasm with AI has sort of gotten a little too. I think people are using AI as a bumper sticker to sell products and companies that shouldn't
Right.
exist, and I see a lot of that. So stay away. We do have one company that received a $50 million company from the Saudi PIF, so I'm happy about it. But we made that investment literally 3 years ago in August, when nobody wanted to pick up the phones. But
Wow.
I think, though, as far as AI is concerned, I hate to say it, but I think America is continuing to be a destination for wealthier people to live and have assets. That's what I think. And I think you're going to see a
Mm,
lot of money flood into America. It's always going to be a safe place for rich people to invest
yeah.
globally. And I think I'm very bullish on that. Where else are you saving for your kids' college education in Russian rubles? Yes or no?
No, no.
Okay.
Yeah, that's the
So
one thing I always go back to. I mean, there's all this talk about the BRICS being, but none of those, economies have a currency that we can trust on a global level at this point. So,
no, not at all.
I,
Not at
you know,
all. Not at all. I mean, what are
so
you gonna you're gonna send your daughter to school in savings in brick currency, right? In the Brazilian real. What happened to the Brazilian real over the past year? It's gotten
I don't know.
slaughtered. It's gotten slaughtered. It has gotten
Wow.
slaughtered. Yes. You get what you pay for, right? I mean, I think people are looking, there's always those guys that are trying to be smart, like, well, what about the bricks? I'm like, go ahead, doctor. You put in your son's college education into the
That's
brick
right.
funds, okay? And I want him in the local currency, not the American dollar denominated, whatever. And he's like, oh, no, that's too risky. I'm like, then shut up. You have no idea what you're talking about. Like, you
That's
just
right.
don't. Where else are you going to put your money? Oh, I don't, exactly. I mean,
Yeah,
some
that's right.
investors, they just need to be treated like, they try to sound too smart, and I think they try to kid themselves sometimes, and they don't really look at it from the standpoint of what does this really mean. Is everybody selling that? I mean, is everybody selling skyscrapers and everything all over the place because we're going to be in we're not going to be in dollar denominated currencies anymore?
Right. Yeah. Doesn't make sense. What about all the national debt talk about the US's
That is
debt
the
to GDP?
that is the single most existential threat to this country. It's not nuclear war. Nobody's going to fire a nuke. It's not what's happening in the Middle East, although that seems like that's kind of stabilizing. It's either oil prices or the national debt. And I can tell you that the debt is dangerous because we put in literally 200 years of credit creation in 18 months during the pandemic. And all
Right.
of a sudden, people got a lot of money who I don't know how, but there was a lot of money flowing around, right? And I think Dodge found out that there was a lot of people who were on the take, like millions of people on the take. But that needs to be, it's a problem though, because when you're dealing with Congress, it's like they're looking for, if they see any savings, they think of that as an excuse to like re-up the credit card, right? Like we just paid down our, we're maxed at $10,000. We just paid off 1,000. Great. Now we have another 1,000 to go. And when you have two businessmen in there and they really understand like that their businesses and lives and families too depend on the strength of the United States for their success. People are paying attention, but it's something that nobody really wants to talk about. Nobody really wants to talk about it. And America, nobody gets elected on austerity either, right? I mean, nobody gets
Yeah, that's
elected on
for sure.
austerity.
I
So,
don't think I
you
think
know,
it's a problem in any country to get elected on
yeah.
austerity. I just had although they've done it and Europe has done it, the not I mean we I'm sure it was not good times, but you look at places like Greece. I remember where Greece was at in 2014, and now 10 years later it's like, it's an up and comer. So that's the thing that you point to about America that's so true is that at the end of the day, even if a cycle happens, even if some private equity firm goes under, or a couple banks fail, America is still the safest, best place to invest and put money in, and long term that will remain true. I couldn't think of anywhere else. Although I wouldn't mind moving to Singapore. I just don't know. I just don't know what the laws are like there.
Who knows? I can't chew gum, right? Or whatever. I've
Right,
never
that's
been.
the
I'd love
problem.
to
You can't
go.
chew gum
Yeah.
in public. That's a real issue. Let me come back to real estate because we only have a few more minutes.
Sure. Yeah.
I want to hear about what you said it at the beginning that that there's been a lot of cash. There was a lot of dumb money the last couple of years. Some of that has expired. Some of it's still out there. There's still a lot of cash sitting on the sidelines looking for deals, and a lot of that has come to fruition. A lot of stuff. Banks have quietly sold off trophy debt products to family offices as a way to boost their balance sheet. There is a lot of extend and pretend and a lot of commercial debt coming up on a maturity this year and in the coming
Hmm.
year or two. How does that all play out, and why did you now? What was how are you? Why did you jump back in and say after 5 years, okay, we're all in again on real estate?
Yeah, I think number one, rates, right? I want to be able to get in where rates are today. If rates go down, better. That's like icing on the cake. Do we underwrite to that? No way. We always stress it on the way up, not on the way down. But if it goes down, good. We all win. We are, and real estate today has become very, very, and it always has been. A lot of people don't understand this, but from the macro level, I see that there's a lot of capital sitting on the sidelines, but they're looking for that. Not all capital looks the same. And the capital we
Right.
like have businesses that throw off operating cash flow that need to put it somewhere. And so, they were putting it into other things like SpaceX and maybe some other credit or debt funds, which is fine. But now that money's moving back into real estate because they see that that's the time for it. In New York, for example, 100 feet makes a big difference, right? I mean, offices in New York, some will be okay. Third Avenue should be carpet bombed, right? So I mean, people
Right.
want to say, yeah, I mean, but I mean, it's true. I hate to say that, but
The
there's
cream
opportunity there.
rises to the top in
Correct.
whenever any
Yeah.
cycle happens.
So whenever we look at it, we like the industrial manufacturing, the transportation hubs. Right now, we're doing one with a storied family, and we have a lot of success with it too. And if people want to know more about it, they can, obviously when they want the book, they can email me a link to the video.
Give
But
your
we're working
email
with
out.
smart people. Yeah, Sal at investinglegacy.com. SAL at investinglegacy.com, and I'll send you an autographed copy of the book. It's also available on Amazon too, although I don't have any codes for that. I narrated that one myself too, which is great. But I
Really?
think,
So if you
yeah,
want to hear your voice for another couple hours,
4
do
hours. I did.
do the
Yeah.
audible version. I've been
Yeah.
I never actually recorded the audible version of my first book. I should
You
do it,
should.
just
You have the voice for it. Yeah.
yeah, and I'm in the midst of number two right now. So hopefully we'll be coming out later this year.
Let me know.
And
Yeah, I'd love to know more about that, please.
it's called this, tentatively called The Storm, and the subline is Financial Markets Meet Mother Nature. And it's about Mother Nature not just being climate instability and volatility, which we obviously now see is a thing, and the insurance company actuarials are showing that to be so.
Oh yeah,
But
yeah.
that is about a third of what the book's about. The other third, and then it's also the effect of government interventions. We know different rules in different places, the cost of capital, and a return to reality, and all of these things kind of coming to create this perfect storm right now for our economy and possibly for real estate. Real estate in along. I think that the I don't like to refer to it as climate change because it always brings up a
Yeah,
political
yeah.
thing,
A negative
because
normative connotation. Yeah.
this is not a political. I never talk politics. This is not a political book. This is meant to acknowledge that there's an instability and volatility that exists. The insurers see it. We now need to other, that's the one thing that I think Europe is ahead of us on, is in terms of infrastructure, in terms of, investing in our own country to stabilize against, whatever climate craziness we're experiencing. I mean, look at these flash floods in Texas, and who would have ever thought a hurricane
Yeah.
in the Carolinas, and it's not just Florida and California anymore. So, it's the whole country, and it's going to actually have an effect. What I was in Athens actually in October, first time ever in Greece, and when you go to the museum for the Acropolis and the Parthenon and everything like that, when it's I never realized how much the Greeks attribute a couple hundred years of climate instability, which was the cycle then back at the end of the Peloponnesian and the Egyptian and the empires that fell back 2,000 years BC. There was that same kind of climate stuff. A lot of, what may be referred to in the Bible, some of those may have been climate related things. And so, this is whether it's caused by us or it's not. That's not what the conversation's about. The conversation is, how do we fortify, and how does government play a role or not play a role? And then what do we do about it? So who knows? That's the next book. It may be a
I
sleeper or
look
a
forward to it.
snoozer.
But it's fine. I mean, what you should do is just get prominent people to interview in the book, right? So
Right.
that's what I've done.
Okay.
Yeah,
One more question, and then I'm going to let you
sure.
go. Prediction for the next, I want it to be a bold, funny, or just whatever prediction for the next 12 to 24 months. Anything that you foresee, and then we'll come back, and next time we talk, we can test it. Or hopefully we'll talk a couple times before then.
I think rates will come down 50 basis points before we talk then.
That's an easy one. Okay, that's like a
All
six to
right,
five
all right, all right,
odds, bro.
all right. 6 to 5. All right. Don't ask me anything about sports because I don't know anything about sports.
But speaking of which, our friend you must see in Miami all the time. I'm in Vegas now. You got to come visit me, by the way.
You got to come out to Miami. It's fun too. I love
I'll
Vegas,
be
but yeah,
I'll be there actually in 10 days. I'll
yeah,
hit
yeah.
you up.
Yeah, please do.
But anyways,
No,
no,
my other
I'll let you.
prediction, I think I do have one, but I think you're going to see the Middle East at peace for a significant amount of time. That's what I think you're going to start to see some sort of peace and things move forward with the Abraham Accords. That's what I think is happening right now. I really do. I think everything's going to be. I don't think anybody's waiting anymore. They're just trying to crush a deal closed. If you know what I'm talking about, and I think you will.
Wow.
I think you will see that at some point peace come because that seems to be everything boiling to the top. There's a lot of things. I mean, we live in a complicated world today, but I think there's, the new sheriff in town, and that's sort of put the world at ease. And, a lot of things have been uncovered. And I think you're going to see a tremendous amount of fraud come out of the Pentagon should they let Dodge or, Garcia, what's his name, get in there, Gracias. I think you're going to see that, but I think it's going to be clean. And I I think you'll see peace, but I think you're going to see America just come into the golden age with more technology, and AI is just going to. And I hope America keeps up with the energy demands. If not, we're dead, right? Because energy
Uh-huh.
is country. Energy is wealth, and if you don't have nuclear energy or any sort of fossil fuels or something powering these AI centers, it's not going to happen.
The
They're going to
Middle
be.
East peace is your prediction. I love it,
I
man.
think
That's a
so. Yeah.
positive one. I love it, dude.
I mean, if you
Okay.
look at what's happening and everything, I think there is going to be things are going to be peaceful. I think for the first time in our lifetime, Bill.
Wow, that's a real, amen to that, brother. It's been great hanging with you. Let's talk again soon.
You got it, booby. All right, thank you. And again, solidinvestinglegacy.com if you want a free copy of my book, autograph shipped to you. I will talk to you later, Bill. Thank you so much.
That's a wrap of today's episode of Debt Doctor. I enjoy bringing this content to you each and every week, and I really appreciate you tuning in. Remember to follow us so you get notified whenever new episodes release. If you haven't already done so, please share one of your favorite episodes with a friend, family, or colleagues. And if you don't mind, leave us a positive review on Apple, Spotify, or whatever your favorite listening platform might be. Until next time, thank you for investing your time with us on The Debt Doctor.